The market just closed out a bumpy February with a couple of little pauses tied to fresh inflation numbers and some AI headlines. But do your family's accounts capture the solid rebounds that showed up mid month? We'll break down the tech bounce that lifted confidence, the brief hesitations that came and went, and practical takeaways that can help you better understand where the market is at. Let's jump in. Hey guys, welcome to this month's stock market recap. I'm Robert Montez with Nexus Wealth Management, and today we're breaking down what moved the markets for the month of February 2026. This was a mixed month with some gentle chop, but overall resilience shining through. The S&P slipped 0.9%, the Dow was up 0.2%, and the Nasdaq fell 3.4%, reminding us that even in bull runs, we can still experience down months. As far as positive factors last month, these three things really stood out. First, we saw a notable rebound in software and tech stocks as some AI's disruption fears eased mid-month. This gave a boost to confidence and innovation-driven growth. Stocks rose on several days, led by names like Nvidia and Oracle, showing the market is starting to separate real opportunities from AI hype. This kind of performance helps remind us that tech remains a key driver for the economy and investment portfolios. Second, we saw strong earnings performance from major home improvement retailers like Lowe's and Home Depot that beat expectations. This was a reassuring sign of consumer strength, which supports jobs and retails and keeps spending steady for Main Street Americans. Overall, this positivity in consumer stocks helped offset some broader pressures and kept the month from feeling too heavy. And third, we saw falling treasury yields, which supported bond prices. This provided a bit of balance for diversified portfolios and showed investors are still seeking stable sectors as part of their portfolios. Even with the inflation data, the bonds market's moves offered a gentle counter, helping families with more conservative allocations avoid much of the chop the general market noticed. Now, on the flip side, here are three things that created a little pressure. First, toward the end of the month, we got a producer price report showing wholesale prices rose more than analysts had anticipated. While initially hampering performance, it turned out to be more of a short-lived blip that the market took in stride without derailing the bigger upward momentum. Second, we saw mounting concerns about AI's impact on certain business models and banks, which created some chop in tech and financial stocks throughout the month. Shares in banks and select software names pulled back as fears grew about AI disruption. Then finally, we continue to see ongoing policy and geopolitical noise. At this point, it's almost an expectation as the global economy is so intertwined in trade deals between nations. So guys, those were the things that helped and hurt the market last month. If you want to connect further on what's happening in the market and how our team at Nexus can help you utilize that data to build an optimized investment portfolio, feel free to reach out directly. Otherwise, let me know what you think in the comments below, and don't forget to smash that like button so that the algorithm lets other people know that this is great content. Thank you guys. See you next time.